Welcome back to Morning Markets on Thursday the 21st of December. Yesterday the yield on UK government bonds fell, generating positive returns following evidence of fall in UK inflation. Stay tuned to find out more. Yesterday, Chris Leyland discussed the evidence of falling inflation here in the UK. As a quick recap, if we look at headline CPI, this fell to 3.9% from 4.6% in the previous month. Core inflation, which strips out food and energy costs, fell to 5.1% from 5.7%. In response, the market reappraised the level of interest rate cuts which they expect to see through the course of 2024. Rather than 5 interest rate cuts of 0.25% each, they now expect 6, which would take interest rates to a level of 4% by the end of next year. Gilt yields across all maturities fell. The biggest moves were in those instruments with a shorter date to maturity and are typically more sensitive to interest rate expectations. Just for some context with some numbers here, the 2-year gilt yield fell by 17 basis points to a level of 4%, 10-year down 12 basis points to 3.5%, and a 30-year fell 8.5 basis points in terms of the yield which is available. A moderation in terms of bond yields drives a positive price return. So it was a good day for UK gilt markets. The bigger returns were felt in those gilts with a longer term to maturity, given the longer duration component. The moderation of interest rate expectations for next year and nominal bond yields also led to a weaker pound. Relative to the US dollar, the pound fell 0.7%, and relative to the euro, around 0.39%. The moderation of the pound, or weakening of the pound, was supportive of the FTSE 100, which was up 1% on the day. Around 70% of the earnings of the listed companies on the index are generated overseas. Therefore, the index benefited from the repatriation of profits with a weaker pound. The moderation of interest rate expectations as we look into 2024 was also supportive for smaller businesses, and this was captured in the FTSE All Share, which captures companies of all different market size, which was up 1.1% on the day. So it was a good day for UK gilts. We saw a weakening of the pound, and it was a good day for the UK stock market as well. That's all for today. Thank you very much for joining. We look forward to bringing you up to date tomorrow here on Morning Markets.